So my video today is going to be on the IPO and SpaceX going public. I am trying to understand everything that's going on as far as Elon with his three companies that have now merged together, two of which never showed a profit as far as X and the AI company. And now he's found a way to merge them all together to make what he says a value of $1.7 trillion. So to understand why everybody is in an uproar about this, because the index funds, some of them have now allowed him to get early entry. That means you can invest into his company without no seasoning, meaning that normally they make you wait like a year or two to see how the valuation goes to protect the investments. But the index have now changed the rules, some of them. So we're going to get into that, how they're going to use your money, your 401k to invest in Elon's IPO, and how there's really basically nothing you can do about it. We're going to delve into how Congress has slid in and paved the way so they can get paid too. So in the end, if this goes sideways, the only person that will lose will be the people holding the bag, because they've been waiting for a decade to get their money out of X, to get their money out of his AI company. And now he's put them all into this one SpaceX. Two losing companies have merged together, and he's opening up the investment for you, the people, because usually when companies do that, they can't find any more commercial investors. So we're going to delve into how this is going to either be the greatest thing since the chicken wing or be the biggest flop we've ever seen worldwide. Let's get into it.
Millions of Americans like you and me are about to become SpaceX shareholders. We won't buy a single share. The whole scheme hinges on something you've probably heard of: index funds. A good chunk of American retirement savings are tied to them. You pick a fund, it picks an index, which picks the stocks. You don't think about it. That's the point. Index funds are supposed to be safe, passive. The rules are the rules. Except, if you look closely, the rules seem like they're being rewritten to make people like Elon Musk fabulously wealthy at everyone else's expense.
Now, normally, Congress would step in and say, hey, we don't think y'all should be doing that. We're going to investigate that. You know what I mean? But since Trump and all his cronies control the House, the Senate, they won't let anybody investigate. Plus, he fired 80% of the whistleblowers that would normally bring it to their attention. So trying to get an agent to investigate now, when the 80% of them have been fired, and they said they hired some of them back, but they're doing it so slow that, it's really not making a difference. So this is why you need to find out if you want to invest or not, because you would have to find out if your index fund is going to go along with investing your 401k money.
Every piece of evidence we have is that the IPO is being engineered to rise very rapidly after it prices and then fall very dramatically after that. That is a recipe for retail investors especially to take large losses.
$1.75 trillion. That's the value Elon Musk has floated for SpaceX when it goes public this month. More than Walmart. Is it worth that?
There is definitely real business to be done there and real asset value there. The question is whether it is as large as Musk claims it is.
George Perkins advises investors where to put their money. Last year, SpaceX made about $19 billion, most of it from Starlink and government contracts. But a company's market value is partially a bet on what that company will earn in the future. That bet is called a revenue multiple. Facebook went public at roughly 10 times its projected revenue. SpaceX is asking for over 50 times.
Now, notice what he said. They got it because of subsidies, government contracts, and he does have a good satellite project. But watch how merging the other two companies doesn't equate to the 54 times of SpaceX true value.
Based on the numbers that we know, that is absolutely batshit.
In 2022, Elon Musk raised $44 billion and bought Twitter. His backers, Andreessen Horowitz, a Saudi prince, the co-founder of Palantir, and Jack Dorsey, the guy who founded Twitter in the first place. Musk renamed it X, and within a year, it's worth less than half he paid. That's a problem. There was also a solution. AI was hot. Musk owned an AI company, so he merged X into XAI. No cash changed hands. X investors received XAI stock. But that solution raised another problem.
So now remember, the original investors of Twitter now get XAI stock. This is how they keep them happy because Twitter didn't make no money when it became X, lost half its value. Well, you say, oh, okay, don't run away, don't run away. Look, XI and Twitter are now in one. So you can have that stock in place to hold them off.
XAI is essentially a money furnace.
The solution? Musk has a rocket ship company. He uses it to buy XAI. Again, no cash exchanged.
Once again, investors wasn't happy. A couple years go by, XAI ain't making no money either. So now he said, whoa. We're going to do it with SpaceX. Put it all together, and y'all know that makes money. Plus, we got them government contracts, right?
3 companies, 2 mergers, $0 actually paid. Everyone who helped take Twitter private now holds SpaceX shares. Now, SpaceX isn't just a rocket company that sells internet. According to Musk, it's the future. Data centers in space.
If some of my predictions come true, SpaceX will launch more AI than the cumulative amount on Earth of everything else combined.
These are the predictions that Elon loves to make. I want to remind you, he also said we'd have a rocket ship to Mars by now. He also said that his cars would be autonomous, self-driving, fully. None of those are even close.
I see no evidence that it's a viable business opportunity. There are far too many physical challenges with doing this.
But the value has to hold, because so far, no one has been paid. Investor shares are only worth something on paper. To turn paper into cash, SpaceX has to go public.
So we're saying that 2 failed companies are now merged into SpaceX, which makes it 54 times what it was worth before. Only because he can't find any more investors on the commercial side of things. So he has to open it up to the public to get your money, to get these people that invested for all these years, more over a decade now, they've been waiting to get paid. So that's where you come in. Listen close.
When a company goes public, it opens its doors. Early investors cash out, get paid for the risk they took. Everyone else gets a chance to own a piece of something that used to be off limits. It's called an initial public offering, or IPO for short.
It is a very normal part of a company's evolution and life cycle.
There isn't just Twitter investors here. SpaceX's original investors took a big risk. Peter Thiel, Palantir's other co-founder, Google, and Andreessen Horowitz. But SpaceX's IPO is anything but normal. In a typical IPO, 90% of shares go to institutional investors, pension funds, banks, insurance companies. Regular people get 10%. SpaceX says they're changing that. 30% to ordinary people. Main Street, not Wall Street.
When you see an IPO give a far larger allocation to ordinary investors, it's usually a sign that they can't get professional investors to buy it at that price. The price is nuts. And if you can't sell it to professional investors, well, you sell it to unprofessional investors who don't know any better.
If people want to invest in SpaceX's IPO, that's their right. The problem is Musk found a way to make people invest in SpaceX whether they want to or not. How? Index funds.
The index fund is one of the rare examples of the finance industry coming up with something that lines the pockets of ordinary people and not Wall Street itself.
And once again, I want to stress, you're watching this video now, And if you are an investor, you need to check and see if your index fund is on the list that approve the early entry for SpaceX to be in their index.
An index is a list. Someone decides which companies go on it. A fund is a basket. Someone builds it to mirror the list. When a company gets added to the index, every fund mirroring it has to buy shares. Not because they think it's a good investment, but because the rules require it.
Index funds have both outperformed the vast majority of active managers in every market in every country over any time frame in the long run.
Thousands of indexes exist. Nearly a third of American stock is tied to one of them.
One of the most popular tracks the NASDAQ 100, the 100 biggest non-financial stocks on the NASDAQ exchange. Under NASDAQ's index rules, SpaceX isn't eligible to be included in the NASDAQ 100. New companies have to wait up to a year. It's called seasoning.
Seasoning a stock is just the process of having it trade publicly for a while. Public markets tend to be unsure of how to handle certain kinds of investments, novel sorts of companies really quickly.
Like a rocket company that makes most of its money providing satellite internet and wants to build AI infrastructure in space.
Hear what he just said. The investment that people are investing doesn't even make money in SpaceX. It's the satellites, not the rockets. So why is it worth $1.7 trillion again?
If Musk could change that rule, he could trigger mandatory buying of SpaceX stock by every fund that tracks the index. This spring, NASDAQ changed their rules. This document outlines the proposed changes to the NASDAQ 100 index. The most important, a fast entry rule. If a huge company goes public, it gets into the index in 15 trading days. No seasoning. There was a public comment period. Wall Street was for it. They say companies are more mature now, and these changes allow the index to better represent the market. The opposition came from regular investors concerned about buying unproven companies at high prices. But the rule change isn't the goal. The goal is what the rule change enables, a plan with 4 different steps. Like everything, the price of a stock is based on supply and demand. How do you increase the price? 1. Artificial scarcity. Most IPOs offer 15 to 20% of their shares to the public. SpaceX, less than 5.
And SpaceX is not making money, which it never has except for the satellite industry. Everybody who initially invested gets paid first. They cash out. What do you think the stock's going to do after the big donors cash out? If there's no business skyrocketing for SpaceX, which it never has been. Let's be clear. I'm just saying.
2. Of those shares, retail investors get 30%, or up to 3 times the normal allocation. Remember, Main Street over Wall Street.
Combined, a bunch of demand and a small supply. That means a higher than normal price. 3. 15 trading days after the IPO, SpaceX enters the NASDAQ 100. Any index fund tracking the NASDAQ 100 now has to buy SpaceX.
Now has to buy SpaceX. That's how we increase the demand. Because right now, there's no demand. Commercial people are like, nah, we don't think it's worth that, bro. You've been there, 10, 15 years now. It's not looking good. Your satellites is good, but all the rest of that is crap. That's the reality. So now they're forcing the demand with your investments that you're not even having to give permission on.
Have this wall of money coming from index funds that it has to buy no matter what the price.
Turbocharging the price. Step 4, let early investors cash out. There are restrictions on this, a lockup period. Same idea as seasoning. The people who know the most aren't allowed to sell until the market has had time to actually figure out what the stock is worth.
According to SpaceX's own IPO filing, Elon has to wait a year. But some early investors can begin cashing out before the standard 180 days. The people buying as the price rises? Retirement savers, through index funds.
The people selling? If history is any guide, the original SpaceX, Twitter, and XAI investors.
I like to stay optimistic when I can, but the setup there is for some pretty abusive market manipulation. Legal, probably. Ethical, doubtful. And in fact, absolutely not.
None of this works without NASDAQ changing the rules. Musk made sure there was an incentive to do so.
NASDAQ is both an index provider and an exchange.
Ben Schifrin spent 18 years at the Security and Exchange Commission, which oversees the stock market.
It kind of used to be the case that the exchange, wasn't really supposed to be this for-profit money-making entity, but now it is.
Two stock exchanges compete for every major listing, New York and NASDAQ.
For the NASDAQ Stock Exchange, having SpaceX is a big win. You want big, prestigious tech companies to go public there, and the New York Stock Exchange wants them to go public on the New York Stock Exchange.
SpaceX was the prize. Musk knew it. According to Reuters, Musk conditioned where SpaceX would list on one thing: fast-track SpaceX into their major index.
It's all gravy for NASDAQ.
SpaceX pays NASDAQ to list their stock. The real money is somewhere else.
All the date and trading fees that they then sell over time, year after year, to other trading firms, to asset managers.
So everybody on Wall Street wins. The big investors, the billionaires, and Wall Street, the index funds, the traders. But you might be left holding the bag with a stock that's worth nothing. That's the reality.
NASDAQ changed a rule that shapes trillions of dollars in retirement savings. No regulator approved it.
If an index wants to change how it's going to include certain stocks in that particular index, that is not something that has to be approved by the Securities and Exchange Commission.
Upwards of $30 trillion is being directed by a process that's effectively self-regulated.
I think it's
Self-regulated. Why can't the SEC do anything to regulate that and say, hey man, that's too risky? This is America's 401k. This is their retirement funds. We need y'all to keep that seasoning going on so we can see if this is volatile or not. You know what I mean? They in Congress at this present time just turn the other head. Why? Why do you think that is? We're going to cover that in a minute.
at some point we are going to have to say that these are incredibly influential investment advisors in practice, and they should be regulated and supervised accordingly.
Now, remember what's happening in the United States right now. Everybody is putting money into AI. And what we see, why they lasted so long, why Twitter's lasted so long, why AIX has lasted so long, is because all the billionaires keep funneling money from one entity to another to keep it afloat, hoping it's going to catch, and that either the world companies are going to buy it, the commercial, or the IPOs. The thing that's fueling it the most is AI, meaning all the data centers. They want more money for that investment so these investments can pay off. They're behind the 8 ball right now. They're tapped out. Now it's your turn to invest in their failure. Watch how this works. If this actually happens and they build all these data centers, what's that going to do for you, the common worker?
Actually, there was another flurry of pink slips that were handed out in May. And yes, you can see the fingerprints of artificial intelligence. Now, this is coming to us from outplacement firm Challenger Gray and Christmas, and they're reporting that U.S.-based employers, they announced about 97,000 layoffs last month. That is a 16% increase from April. And as you mentioned, this is the highest May total since 2020, back when COVID was crippling the economy. And when you look at the trend, you can see there was this big spike last spring. This was when DOGE was really slashing the federal workforce, also when the president rolled out his global tariffs. Thankfully, announced layoffs, they have come down since then, but they are up 3 months in a row, and they do remain elevated. So where are these announced layoffs? Well, pharmaceuticals, finance, this is fintech. They're about 5,000 to 6,000 each, almost 7,000 in transportation. But look at technology. That really stands out. Almost 40,000 announced layoffs there alone. That's the highest in any month for the tech sector in 3 years.
So you just heard, if they keep building in tech, it only cuts our jobs. That's it. So the common people that are not, in the tech industry, as far as engineers, coders, the high level degree things, and the tech is moving so fast, a degree really don't even matter, because in 2 years, your degree is done. you got to go get more training. So if they continue on this path, it will be detrimental to you, the common worker. I don't know how many people is going to watch this video, whether you're common workers, whether you're investors, whether you're right, left, it doesn't really matter because it's going to affect all across the board. If you're an investor and you have a 401k, if you don't invest and you just have a job that might be taken over by AI, either which way, you're going to be affected. So as far as I can see, there are some people that will not be affected. And who do you think those people are if they're not the billionaires? Take a guess.
It is wrong fundamentally, and the American people know it's wrong.
When people think of the best investor in the world, the person who knows the stock market best, they often think of Warren Buffett. Buffett regularly beats the market with his investments, netting about a 19% return, which is pretty good. If you put your money in an index fund, you'll often get about 10% a year. So Warren Buffett nearly doubles that. Not bad. But there is one group that beats the market by even wider margins, taking in massive profits. They aren't math geniuses, they aren't experts in statistics, and they aren't using an algorithm developed by some tech startup. And they don't work at a stock exchange on the trading floor. They work here, on the floor of Congress. They're your elected representatives.
Insider trading. That's how they do it. Killing Warren Buffett. And Warren Buffett knows the system better than just about anybody. And he took out a year and a half ago, $300 million out of the market and said he's just going to sit on it because he's expecting a crash, a big bubble crash. He said, I'm making little moves and I still got investments and stuff and everything, but I'm just going to wait. I'm just going to wait. Because he knows what's coming. And he knows if he has 300 mil stacked back, that opportunity is going to come to him when the market crashes. That's when they make the most money, when the market crashes. So Buffett sees it all coming. And everybody else is just raiding the public with these grifts. They're grifts. Because they say one thing on the House floor, then they go and call their broker, and they know what's coming, they know who's getting the contract, and they tell them to invest. Donald Trump has mastered this. That's why I say there's going to be international RICO charges coming for Donald Trump. Trust me. Now, how do we know that it's going to crash? History is the best you can do to judge. Here it is.
This is a short clip of that Bloomberg interview with the billionaire Ray Dalio.
All great technology changes produce bubbles. And then when people bet on the technology, which I'll bet on the technology, but they think that buying the stocks is betting on the technologies, which is a different thing because the stocks can be expensive and so on. That's a problem.
So what's the end? Is it a bubble that bursts eventually?
I think it is, yes.
Bank of America compared previous bubbles to the current AI bubble. It looked at the bubble in the US stock market in the 1970s. It also looked at the enormous bubble in Japan in the 1980s. It looked at the dot-com bubble in the late 1990s that peaked in 2000, and it compared it to the new AI bubble. And you can see that the current level of concentration in the US stock market is at the exact same level of the previous peaks in all of those previous bubbles.
So everything starts at the crash around 40%. It's a concentration of Nifty 50 in the 70s, in the 80s, 2000s, and 2020s. All of these crashes right here happen after 40%. This is the historical concentration peaks.
Now, this does not necessarily mean that this is currently the peak. It's possible the bubble can keep inflating. History, of course, does not always repeat exactly the same, But history does echo, and we should learn from history, and we should be very concerned about the extreme level of concentration and overvaluation in the US stock market.
Now, the peak is at 41% right now. And as long as the billionaires keep dumping money from all their other investors and all their other businesses to keep it pumping up till you buy it so they can cash out. See what I'm saying? The problem is America's GDP is so bad right now that nobody's going to be able to afford that crash when it comes. We're going to wipe out entire life savings. People don't have another leg to fall back on. And right now, things are really, really bad with the economy. So let's listen to see what's going to happen.
Now, there are several ways to measure overvaluation, and Bloomberg published a very interesting chart that took the average of many different measurements, including the trailing PE ratio, that is the price to earnings ratio of a company in the past year. So you look at the past 12 months of earnings, and then you look at the price to earnings ratio, as well as the forward PE ratio, which uses an estimate of what earnings of the company will be in the upcoming months, as well as several other metrics, including market cap to GDP. Bloomberg took an average of all of those metrics and found that US stock market valuations have never been higher.
That's why you heard Pam Bondi say the Dow is over 50. But it's overvaluated. And this is the reason why.
In the past 100 years, the current level of valuation of the US stock market is even higher, not only than the 2000 dot-com bubble peak, but also 1929. Again, the 1929 crash contributed greatly to the Great Depression in the 1930s.
So you see, the markers that we go by have been hit time and time again throughout history. Same thing repeats itself. So we're at the point past when the last depression came around. We're way higher, overvaluated.
But if you read the IPO prospectus, you're in for a surprise. SpaceX is now apparently an AI company. According to the document, 93% of the company's total addressable market is attributed to AI. And based on the capital expenditure breakdown, roughly 60% of all spending is now going into artificial intelligence infrastructure. The prospectus breaks down the business into three segments: space, connectivity, and AI. In the first quarter of 2026, the space division, the part that actually builds and launches rockets, lost $662 million.
Did you just hear that? Did you just hear that? Lost $600 billion. Does that sound like a successful company? Does that sound like we are overvaluating our stock? Does that sound like we're manipulating the market? This is how the Great Depression happened. Overvaluations, extended out credit. And once we get to the credit part of this, when you stop being able to borrow, when this crash happens, listen to how bad this company is. And you tell me if it's worth the value he's setting it at when he opens for the IPO.
The connectivity division, which is Starlink, turned a $1.1 billion profit. The AI division lost.
That is the only division that works. The satellites. And I believe 45% of that is because of government contracts. Subsidized.
$2.5 billion in just the last 3 months. The only division that makes money, the space division, the part that actually builds and launches rockets, lost $662 million. The connectivity division, which is Starlink, turned a $1.1 billion profit. The AI division lost $2.5 billion.
XAI lost $2.5 billion. Remind me again why we're valued at $1.7 trillion?
In just the last 3 months. The only division that makes money is the satellite internet business. Everything else loses money. When Musk says that this is an AI company, what he means is that the one business that actually works is subsidizing a money-losing AI venture.
Now, the metric that I personally prefer to measure whether or not we're in a bubble is what's known as the Buffett indicator, named after the billionaire investor Warren Buffett.
So now we have to learn something called gross domestic product, GDP. We're talking about all 350 million people in America, okay? All 350 million people in America is the total monetary value of all finished goods and services produced within a country's borders during a specific period. It serves as a primary scorecard to gauge the health and size of a nation's economy.
And he likes to look at the market capitalization of all publicly traded stocks as a percentage of GDP. And you can see that as of the beginning of June 2026, it is at nearly 240% of GDP. That is to say, the market capitalization of the US stock market is 2.4 times the value of all of the goods and services produced in the entire US economy by 350 million people in 1 year.
Did you hear that? Overvalued. It's not there. The services, the goods, the products, it's not there. It's just valued at that. This is the bubble. I hope you can follow along. Here, let me give you an example.
That is absolutely crazy, especially when you compare it to past bubbles. Like, for instance, when the housing bubble peaked in October 2007, the US stock market was 105% of GDP. Or perhaps more relevantly, the peak of the dot-com bubble in March 2000 was 138% of GDP. Yet now we're at 239%.
We're not even counting the deficit. We're not even counting that. $39 trillion deficit. If we're at 238 right now, and it is expected that at the end of this year, because of all the war stuff and everything, and all the money that's being made for all the ballrooms and, arches and everything like that, and all the payouts he's doing to all the, J6 people, which that's not really going to happen. I already told you that. But the payouts to the people like Mike Flynn that pleaded guilty, and when he got out, he sued. And they gave him the money because the DOJ just gave it to him. Not even a real investigation on it. Just gave him the money. He's not the only one. Trump has been pardoning people and taking money for the pardons. Donations, donations, donations. So the market isn't even getting that money. It's highway robbery. Now, we're in this new bubble right here, and everybody wants to cash out. I made a video that said, these are your new founding fathers. And I told you, once it all crashes down, then they're going to start the free market government. Have you seen what happened in Honduras? I've been preaching this for 3 years now. Have you seen what happened in Honduras? That's what's happening here. You need to check out what's going on in Honduras if you don't know. You need to check out California forever here in the United States, what a free market government system is.
Change the laws of the land.
Donald Trump has already offered him a key appointment if he's reelected.
At the suggestion of Elon Musk, and making recommendations for drastic reforms. And Elon, because he's not very busy, has agreed to head that task force.
Now, you know that they always run a test pilot first, right? The beta test. Well, in 2017, a company out of Delaware, Delaware, went to Honduras and just ran amok.
It is absolutely outrageous that in Honduras, after the coup in 2009, there was this radical project to create these sedes, as you mentioned, private cities that U.S. corporations could come in and control the territory. The territory was removed from municipal jurisdictions, and then they had the power as a corporation to set their own regulatory standards, tax policy, monetary policy, security forces, have their own separate court system, and basically run their own government. And in the case of Roatan, this company, Prospera, came in and established this private zone where the governance structure does not allow for representative democracy from the people of the community. And at first, the people in the community didn't even know that this was happening. It's happening in such an opaque format. And once people understood what this meant in terms of taking away Honduran sovereignty and taking away land from communities, there was massive uprising. Indigenous people, community organizations, even the largest business association in Honduras opposed this corrupt law. And so through the democratic process, fortunately, they managed to overturn this corrupt law. The Xiomara Castro administration ran on a platform of repealing this law, and they did so. They made good on their promise. The National Assembly overturned or repealed the law, and that really should be the end of the story. It's a victory for democracy in Honduras after a very dark period of right-wing rule. And then that's not the end of the story because of the trade agreement that no one knew about, and these secretive trade rules that empower corporations to be able to challenge democratic policies outside of the court system. This isn't in a U.S. court. It's not in a Honduran court. It's in a private tribunal of private sector lawyers, 3 arbitrators who will decide whether to basically ransack the treasury of the tiny country of Honduras to the tune of $11 billion with a B, which again, as you mentioned, would bankrupt the country. So the company is using this as an additional tool to try to bully the government to not implement the democratic will of the people.
Okay, so here's how it works. I'm gonna break it down for you. Don't worry, I got you. Bill Gates and Elon Musk buy Central Park. And then they lobby to the city to say, hey, man, we want you to make an amendment for us, okay? Because we're not going to follow any federal laws, no tax laws, no OSHA laws, none of that stuff right there. But we will follow your criminal laws. That's about the only thing we're going to follow. So, yeah, this is going to be like the Cayman Islands. We're going to jump off all Bitcoin straight up, and we're going to bring in every major Silicon Valley startup company you could possibly imagine. And all this property right here, we ain't going to build out. We build $400,000 spaces for everybody. But here's the sweetener. See, we're going to have eminent domain. So if we want to take more, as long as y'all agree, the city of New York, and the government agree to it, we can just, agree to take it.
You don't have anyone that you can directly communicate your concerns to.
A heated town hall meeting this evening between people who live in Solano County and the developer of California Forever, a proposed new community in that area.
KTVU's Joey Horta was at tonight's town hall. He's here in studio with us tonight. Little venting session, you could say, for some of those in attendance.
Yeah, I got a little tense in there, guys, tonight, and we'll tell you what's going on in there in just a sec. All of it started out with a presentation from the CEO of this project that would see the formation of California's newest city. But many of the people in the crowd there cut off the founder, causing a passionate exchange. They don't want this happening in their backyard.
We have an idea for how to make Solano County better.
California Forever CEO Jan Schrammick breaking down the project that would create the state's newest city. He's invested $900 million, buying up 60,000 acres, 4 miles from Travis Air Force Base on mostly agricultural grazeland in southeast Solano County, causing an uproar.
What about the Native American graves that you are going to be excavating and building on without even consulting us, the natives of this land?
But they need for all of this to burn down. That's why all the billionaires are doing this. It's been going on since COVID. And I told y'all about the land grabs. And I told y'all that they wanted the water beneath. Water is going to be the new gold. When all these cities that Jeff Bezos, Bill Gates, Elon Musk, Peter Thiel, all of them are building these new AI cities, and they're going to have AI government where they can write the laws and say, well, it's AI that's judging you. And they can't be wrong. But they're the ones coding it for their cities. And if you don't know what free market government is, that is a government that coincides with the existing government within a country. But they have their own EPA rules, they have their own banking rules, they have their own citizenship rules. Basically, they just bought a land and said, we're going to run this right here. The only rules we're going to follow is the rules for, like, thou shalt not kill, we won't rob nobody and stuff like that. But all the other stuff, we make that up. What Congress usually does, y'all ain't got nothing to say on that in our cities. Let's continue.
It's absolutely insane. However, one problem with that metric, the Buffett indicator, is that it looks at the market capitalization of all of the stock market, of all publicly traded stocks. But in the current bubble, this is being driven by just a small handful of big tech companies. In fact, many companies in the US stock market have not been performing well. Increasingly, the major stock market indices are being dominated by just a handful of big tech corporations. In fact, when you look at AI companies, compute infrastructure companies, and power companies, so these are companies all related to the AI sector, they now represent 53%, a bit over half of the market capitalization of the S&P 500, which is the most important stock market index. It consists of the 500 largest publicly listed companies. So what companies are we talking about exactly? To be more specific, just 12 companies accounted for 12.2 percentage points of the S&P 500's total return of plus 16.3% in April and May 2026. Those 12 companies are Alphabet, Nvidia, Apple, Micron, Broadcom, Amazon, Microsoft, AMD, Intel, Tesla, SanDisk, and Cisco. Just 3 of those big tech companies, Alphabet, Nvidia, and Apple, have contributed more than the other 488 stocks of the S&P 500 index combined.
Now, quick note. S&P 500 is the only ones, just as yesterday, the day before, said, no, we're not doing it. Now, you ain't jumping on our index. We value our customers. You're not robbing them. They said, we're not changing no laws for you, Elon. So you're going to have to wait the season time, just like it's always been. But all the rest, the NASDAQ, the New York Times Exchange, all the rest of them just about, let them do it. So if you're on the S&P 500 investments, you're safe. You're safe. I just wanted to say that. At the time this gentleman made this video, they were in the process of making the decision on it, whether to let him in early or not. They decided not.
3 companies outperforming 488. And those other 488 are not small, insignificant companies. Again, the S&P 500 consists of the 500 largest publicly listed companies in the U.S. stock market.
Okay, so just with the S&P 500, you see how much the American economy has been inflated by the billionaires. 53% of all investments made, a comeback is because they're manipulating the market. They just keep investing in each other's round and round and round and round. You got to follow the money. Okay, so I want to delve into what I've been saying, that all the companies have been propping up their own stocks for the last 10 years to build up to this moment to be able to get their money back and make a killing, and to be able to break America so they can really do what they want to do. So the money has been going in a complete circle to prop it up for the last 10 years. Now you say, well, ain't they been making good money? Google, Anthropic, Oracle, Palantir, all these tech companies, ain't they making good money? It's not about making the good money. It's about certain parts of their industry that are not making money, that is grift just for you to give them their money in the end. And they do it like that. The long arm of the investment. Listen close.
So let me show you. A group of analysts at the Financial Times looked at something called the CapEx, which is capital expenditure, a fancy way of saying how much money Microsoft, Google, Amazon, Meta, and Oracle are planning to spend on building out AI infrastructure between now and 2030. And then they looked at how much revenue those same companies are expected to make from those investments over the same time period. And so they asked, okay, are these companies going to make more money than they spent? And the answer for almost every single one of them was no.
Stop right there. Now, I did the research on this, because if they're not making money and they've been throwing their money around, they say, okay, now's the time. Let's cash out, right? I thought, what is the plan if people don't buy into this? Because we all see the game. Maybe many of you don't, because you've been watching legacy news and they don't talk about this. Because Larry from Oracle, as you can see, is down there at the bottom of the list. Larry from Oracle, right here, has the media on lock. On lock. Also, I want you to pay attention. Microsoft, Alphabet, Amazon, Meta, Oracle. That is half of the 16 that went to China. That is half of the 16 that went to China. The reason they went to China is because they know they need a backup plan. They need somebody to buy our debt. And what was going on was Trump was wanting for Xi to open up his markets to his regular people, because only the elite can buy into American investments. It is a closed market to the regular Chinese people. And what Trump wanted them to do was to say, hey, you see all these guys? They're doing great, man. Don't y'all want to let y'all people invest in American businesses? And Trump was ready to give up Taiwan for that. Trump told Taiwan, yeah, we ain't finna send y'all no weapons. We already had a deal with them to send them weapons. But Xi is like, why would I make a deal with you when you funding Taiwan over there? I want Taiwan. They are part of China. Trump was saying, well, you gonna let your regular people invest in America? You know how many people's in China? You know how much money Chinese people have, regular Chinese people that are under their dictator, and they can't buy anything because the government owns everything? They have the best savings of any other country, regular Chinese people, because they can't buy anything. So Trump wants to tap into that to give them our debt. Y'all buy houses over here, buy into our businesses over here. We'll loan you money. We'll loan them money. We'll make special deals. That's what they were doing over in China. All 16 of the top companies.
SpaceX trip to China this week. They are Apple CEO Tim Cook, Tesla and SpaceX CEO Elon Musk, NVIDIA CEO Jensen Huang, Boeing CEO Kelly Ortberg, and Micron CEO Sanjay Mehrotra, as well as top executives from Meta, Goldman Sachs, MasterCard, and Citigroup.
That was the backup plan. We don't know how that's going to shake out. But I'm just giving you the gist because you hear the numbers right here. This is readily available information to the public. So now I'm going to back up what I said, that all the businesses have been giving money to each other to prop it up to this moment to leave you holding the bag. Let's get it.
Under the most generous assumptions possible, assuming zero costs, no salaries, no electricity, no overhead, nothing, Microsoft's implied return on its AI investment was negative 9.2%. Google was negative 15.7%. Meta is negative 28.8%. Oracle's negative 35.6%. The only company that clears it into positive is Amazon at just 7.2%. These aren't worst case scenario numbers. Remember, these are the best case numbers, assuming it costs these companies literally nothing to build and run their AI infrastructure. They all still lose money. Now, let's look at how they're funding all of this. Where do they get the money to do this? This year alone, those very same companies have issued over $150 billion in what are called corporate bonds to fund this AI spending.
Corporate bonds. Corporate bonds. That is another way to have them invest in their debt. Have you invested to their debt? Okay? So the corporate bonds is basically free money for them. Free money. Watch this.
Now, to put that in perspective, that is more than double what they were doing just 2 years ago. And look what's happening to what's called their free cash flow as a result. Microsoft, Meta, Google have all seen their free cash flow margins, which is the actual money left over after spending, collapse towards zero when you account for their AI capital expenditure. JP Morgan's analysts are projecting that by 2027, several of these companies will have negative free cash flow.
A lot of that has to do with just this horrible situation that Trump has put us in. So no other countries are buying into our businesses. That's what's happening. China's beating the brakes off of us right now in the tech industry as far as getting investments. You see the numbers. Why don't you know this? Ask Larry Ellison, the owner of Oracle, the one that's been buying up all the TV stations.
Meaning they will be spending more than what they'll be bringing in. From companies that were just a few years ago, the most profitable businesses in human history.
Time to cash out. You heard me?
But it gets crazier. On the other side of that spending, look at who they're spending it with. It is all with each other. OpenAI has committed $280 billion to Microsoft and $138 billion to Amazon. Anthropic committed $30 billion to Microsoft and $100 billion to Amazon. In total, OpenAI and Anthropic's spending commitments represent roughly half of Microsoft's entire revenue backlog, 54% of Oracle's, 51% of Amazon's. So what you actually have is a system where big tech invests into AI startups. The AI startups then use that money to rent computing power back from big tech. Big tech books the investment gains as profit and then uses that profit to justify spending even more. The money is mostly going in a circle. Michael Burry's company recently did a deep dive on this exact thing, and the circle only keeps spinning as long as everyone sort of agrees about the valuations, which sort of brings us back to the IPO. The second these companies go public, the valuations stop being whatever just a couple investors decided they were in a private funding round, right? They become whatever the open market decides they're worth. And if those numbers come in lower than what Google and Amazon have been booking as profit, then those profits have to get revised, right? The earnings that justified the stock prices get revised downward. And then the whole loop goes in reverse, right? So this theory says that is why the timing of all of this is so important to them. That's why they changed the rules. That is why there's such an urgency to get these IPOs to go public as fast as possible.
I'm done. I'm done. Now, you don't get in touch with your index fund, or if you just a regular guy who don't invest, supports this AI move in any way. By that, I mean voting for people that are voting to have these data centers and all that kind of stuff. You'd have lost your rabbit mind. I'm Charlie Johnson. I'm just saying. So they're not making money yet. Now, I want to tell you that Elon's not the only one. You got Chad. You got Anthropic. They're right behind him. They're going to do the same thing. Everybody wants you to hold the bag. Whether the bag becomes profitable or not, the chances are slim to none because it hasn't been profitable thus far. They're tapped out. They're trying to find new ways to get you money, to get their initial investments back. So they've been propping it up by giving each other money, investing in each other's business to keep it propped up. So how did this happen? Because history always repeats itself. The fact that the currency changed, back in the day, it was gold. Then gold went to paper currency. Now it's up here with stable coin. Now the treasuries are backed by, the stable coins backed by U.S. treasuries. They're trying to change the currency again so they can get rid of the deficit. But the deficit is way too high. The math doesn't math. So they come up with these grifts, the index funds, to allow the billionaires to keep making money. But let me give you a quick little note on history.
Confidence in the economy at that point, and so everyone's like, I need to get my money out of the bank, and the bank's like, about that, we don't have any of your money. And then that was the beginning of the crash, and the FDIC was created to alleviate that, so that, hey, just so you know, if you pull your money out, we got you. But from what it sounds like, they don't actually have that money.
I want you to pay attention. This is a part of the over-evaluation. Remember we talked about that 238%, the GDP, and how much goods we actually have and how much they're actually valued at, how much is actually borrowed on that. If everybody was to cash out right now, they couldn't pay everybody. They couldn't pay everybody. Let me show you why.
To have you in it, but to have your back in that case.
Okay, so what really happened in the Great Depression is we were transitioning from a gold standard that created limitations on how much money they could print and how much debt they could take on, because it was a 20th of an ounce that backed $1. So 20th of an ounce, they could print $1. When they legalized the Federal Reserve, now that same 20th of an ounce, they needed flexibility. Right? That's always we need flexibility. We need to be able to do more. So now this 20th of an ounce, instead of backing $1, back $2.40.
Can you understand what she's saying? This is the government saying we can borrow two on one. It's not there, but we want to loan it out so we can make money. It's not there. It's printed out of thin air. But they make these rules because they want to make more money. And in order to make more money, they have to do what? They have to get lenders. They have to have money to lend. So they made this new rule, instead of it being backed by 20 ounces of gold being backed by $1, now it's $2. And we got to loan that out so we can make money.
And that's exactly what they did. So when you look at the purchasing power chart, number one, that was when they converted corporate debt into our money, right? We had the $20 gold coin was the original. Then they converted it to that because this is so inconvenient, so heavy to carry around coins, but paper is much easier. But you could walk into the bank with this, walk out with this. And at the same time, they put the Federal Reserve notes, so the pure corporate debt instruments in the system.
Keep hearing that word, pure corporate debt instruments. This was the debt. That other dollar was the debt. We want to take that and loan it to you so you can pay us back and we can still make a profit. I hope you understand that.
Every single one of these bills has the same nominal face value, $20. All of them are $20. Today, this has, I think I probably paid $5 for it because I don't pay for this stuff. You know, I'm not willing to pay a lot for it. This is somewhere around market value of like 5,000 or 5,500 or something like that. Still not reflective of its true fundamental value. And how much can you buy with this $20 bill? Right? So they printed all that money, and this was also the first time when they were shifting the U.S. from really a farming community to a consumer-driven economy. So now
that was the industrial age, is what she's saying, and people needed to borrow big money during the industrial age, which fueled the Roaring '20s. So they had to create that scenario to be able to loan all the big people, the Rothschilds and all them people, money.
20s, they pumped all that almost 2.5 times more money. I have all the proof on this. 2.5 times more fiat money, introducing the debt money into the system. And that's what created the Roaring '20s.
You hear what she keeps saying? The debt money. All of this is so that we can try and pay that $39 trillion debt. I'm telling you. Wait till you hear the deal Elon is going to come away with if it all works out.
'20s, because there was so much new money out there that, you know, that could trickle down. And the middle class for the first time had access to credit. And so they did. And they're watching the stock market go up, 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 up. They're watching the industrialists making all of this money. Well, they had a lot more free cash now.
She's talking about they printed money because they raised the value of the ounce of the gold to give people money to help pay off the debt from loaning all the billionaires startup money for the industrial age. So they're transferring the wealth from the bottom to the top. You're paying the debt. You didn't spend the debt, but you're paying for it. See how that works?
Credit, they had more cash in their businesses. They wanted to emulate those that were in power. And so I think it's really interesting. They actually, for the first time historically, granted a perpetual charter to a central bank, right? Typically, the charter was for 15 to 20 years because the governments typically knew that the central banks would end up inflating away the currency, so they could point their finger and say, oh, we didn't do it. That's not true either, but we didn't do it. It was those darn central banks.
So the fight that's been happening with the Fed chair, Powell, and Donald Trump, it's already happened 2-3 times before. So he's out. The Fed chair is out now, and they've already picked a new guy to come in. And we're waiting to see if he's going to do what she's saying. So we'll see. But I just wanted to throw that in there. History repeats itself.
So they could use that as an excuse. But the perpetual charter was granted to the Federal Reserve I could be wrong about these dates, but I'll be in there pretty close. It was either 1927 or 1928. At the same time, I think it was 27 was a perpetual charter, 28 was when the big kahunas started getting out, the industrialists started getting out and taking their profits. But the general public, naive, they know nothing, right? It was just a house of cards. And so they just kept pumping money into it. And then then the government or the central banks pulled the credit punch bowl away.
You get it? This is what the index funds are doing. This is what Elon Musk is doing. What she just described, that's the scenario we're in right now. That's the scenario. And the whole Congress is allowing this to happen because Trump is a bad planner. The tariffs didn't work out. The trade didn't work out. Stealing oil from Venezuela didn't work out. He's scamming, getting all these luxury jets with Qatar. The war, nothing has worked out to get rid of this deficit. So now we're back to the billionaires trying to pump up these stocks to loan them out to leave you holding the bag. Are you listening? Are you listening?
That's what created the crash of 29. After enough of the risk had been transferred from those industrialists to the general population, now all of a sudden it was too expensive to support these very overvalued markets.
Stop right there. So once they cashed out and allowed you, the consumer, to invest in it, the banks were like, y'all not billionaires. Y'all, we can't loan y'all no more money. Y'all don't have assets like they did. That's what caused the Great Depression. You understand? So I'm looking for that to happen again. It's happened time after time after time again. But usually the little people don't bear this much of the brunt end of it. 238 overvaluation. No one's going to be able to recover from that. No regular people. We may have to start the government over again, which is what they're hoping, which is what I'm trying to explain to you about the free market government and the long arm plan that's still 5-6 years off if they get it off. They didn't plan on Trump being such of an asshole and losing the support of the people. That's why it was important to take over all the media so they can hide this under the rug, so they can hide the ICE under the rug, so they can hide not investigating the criminals that are robbing you of your money on a daily basis, not investigating all the people that are insider trading on Congress, letting people go that are, crypto criminals so he can get $1 billion and make them invest into his cryptocurrency. He wants to become the Bank of America. Trump does. That's what World Liberty Finance is all about. The problem is we as a country are overextended and we can't keep supporting all these wars. We can't be in Ukraine, Iran, Venezuela, Cuba. Iran destroyed all of the bases, capabilities to be able to see incoming missiles. They took out all the radars. They blew up a lot of the planes. So all that money that Saudi Arabia invested in Trump, now they losing. They're losing because Iran is just beating them down at will. They being nice right now. They just retaliating. If they really wanted to, they just bomb. But they're saying, we know Saudi Arabia ain't the problem, but y'all rolling with him. Stop letting him use your air bases. Stop rolling with this mug. Let us handle our business. Me and America. Y'all ain't got nothing to do with it. Leave it alone. Or else we'll shut this whole bitch down. And they did. And Trump knew that was going to happen. He was thinking, oh, that's going to force everybody to come buy oil over here. That's what Trump was thinking. Now, the oil companies that pulled out of Venezuela, they went over and said, it's too volatile, man. It's too volatile. Who's going to protect us over there? We already over here, over there, and we had a $39 trillion deficit. Y'all didn't know that, did you? So he stole the $500 million worth of oil, and he sent it over to Qatar's bank, not America's bank. And that was supposed to be the payment for using the air bases that there might be some damage coming for retaliations. But now the Saudi Arabia's like, no, this is way too much damage. Way too much damage, bro. It's going on way too long. It's supposed to be 4 days. We had 100-some days. And we still getting blasted. That little 500 mil, that been gone. How much are we losing a day because we can't move our oil? So nothing works out for Trump. He is the worst planner on the planet of Earth because we know by his past history. What you thought was a great business is nothing but a fraud. The Trump Organization. He's still yet to account for that, but it's coming. The only reason why he isn't accounting is because he's the president now. But nobody is being fooled again. That's why his basis completely fell apart and turned on him. 80% of his base has turned on him. 80%. You're only seeing like some people be happy because they're making money off of him and because Larry Ellison owns so much of the media. So if you're not watching YouTube and independent outlets, you're thinking, oh, Trump doing great. According to Fox News, according to News Nation, Larry Ellison's got a monopoly on the legacy news right now. That's why Trump talked to that lady the way he did. I'll have you fired tomorrow. Keep it up. I just call my boy Larry. Who you work for, CNN? Yeah. Watch how I do this. See if we can get some FCC violations on you. Don't get caught holding the bag.
Oh, it sounds kind of familiar. Yeah.
What's a credit punch bowl?
Oh, well, credit punch bowl means that any individual could go in. It's kind of like if your kid wanted a credit card at this age, they'd probably give them a credit card at this age. So the credit punch bowl is the ability of the individual to borrow.
Just walk up and
Just get money. You know, I mean, that's the credit punch bowl. Now you owe that money. Now you have debt and you have to service that. But that's the credit punch bowl. And a lot of people will look at their credit, and this is how they want us to look at it anyway, that's our money, that we can go out and just use that credit and keep stimulating the economy, while at the same time you're depleting your ability to continue to consume. So when they pulled that punch bowl in 29, well, enough risk had been transferred from the few, from the 1%ers to the many, and that's when we went into the Great Depression. So it was because of all of the overprinting of the money and that opening up of that credit window. That's really what created that zoom up in stock prices. But that was just a wealth transfer mechanism, just like today. It's
just like today. Happening all over again. It's happened a few other times before.